Millions of dollars in daily trading volume, and half of it might not even be real. Welcome to the wild west of token markets, where the numbers lie, the charts smile, and your wallet cries. You've probably seen it before. Some obscure token suddenly explodes onto the trending list. Volume through the roof, price pumping, community buzzing like it's the next big thing. But here's the uncomfortable truth. A significant portion of that activity could be two wallets, owned by the same person, playing hot potato with their own tokens to fake demand. This is called wash trading, and it's essentially the financial equivalent of clapping for yourself in an empty room. The mechanics are simple. A bad actor buys and sells the same token back and forth, inflating volume artificially to trick you into thinking there's genuine interest. Think of it like a restaurant hiring actors to stand in line outside. You walk by, see the crowd, assume the food must be incredible, and suddenly you're waiting 45 minutes for mediocre pasta. The restaurant didn't earn that line, and neither did that token earn its volume. The reason it works so well is behavioral, not technical. Our brains are wired to follow the crowd, to interpret volume as validation. When you see a token doing $50 million in daily volume, your lizard brain whispers, other people know something you don't. And that whisper is exactly what manipulators are counting on. Now, here's where the red flags start screaming if you know how to listen. The first dead giveaway is a token with massive volume but razor-thin liquidity. If the order books look like a ghost town while volume charts look like a stadium, something is deeply wrong. Another classic signal is perfectly uniform. Candle sizes over extended periods. Real markets are messy, emotional, and inconsistent. But wash-traded volume often looks suspiciously rhythmic, like someone set a bot on a timer and forgot to add human chaos. Look at the wallet distribution too. Because if the top 5 wallets hold 80 or 90% of supply while volume looks diversified, you're watching a puppet show. On-chain analytics tools like Nansen, Bubble Maps, or even a free wallet explorer can reveal clusters of wallets moving tokens in circular patterns, same amounts, same timing, suspiciously low gas fees, suggesting batch transactions. History is full of these schemes. From the penny stock boiler rooms of the 1980s, to the ICO era of 2017, where projects paid exchanges to fake their way onto volume leaderboards. The misconception many newcomers carry is that exchange-listed volume is somehow verified or audited. It absolutely is not, especially on smaller, decentralized exchanges, where anyone can create a pool and anyone can inflate it. Some people assume that if a token is on a reputable aggregator like CoinGecko or CoinMarketCap, the data has been scrubbed clean. But those platforms themselves have historically struggled to filter fake volume at scale. Here's the practical playbook. Before you buy any token, cross-reference volume across at least 3 independent data sources. Check for sudden volume spikes with no corresponding news or catalyst. And always ask yourself, who benefits from you seeing those numbers? Disciplined investors don't chase volume. They interrogate it, question it, and demand that it makes sense within a broader narrative before committing a single dollar. Position size matters more here than almost anywhere else in speculative markets. Even if you're wrong about a token being legitimate, a small, calculated position limits the damage while leaving room to be right. The emotional investor sees volume and doubles down. The process-driven investor sees volume and gets suspicious first, curious second, and cautious third. Philosophically, the market will always have manipulators because incentives attract bad actors. And the best defense is never assuming you're smarter than the scheme. It's building a system that protects you even when you're fooled. Discipline, sizing, and consistency are the only moat you truly own in an environment designed to part you from your money. The irony of all this is that the very transparency blockchain promises every transaction on a public ledger gives you more tools to detect fraud than any traditional market ever has. You just have to be willing to look, and most people aren't, which is exactly why this keeps working on the ones who don't. So the next time a token shows up, trending with jaw-dropping volume and zero explanation, don't reach for your wallet. Reach for a block explorer and start asking hard questions. The chart that looks too good to be true usually is, and the one that looks boring but clean is often where the real opportunity hides. Whether you're navigating token markets, building long-term wealth through real estate, or planning your next renovation project, We're here to help. Check out our links in the description below to get connected with our investing, contracting, and lending resources.